Hey guys, how's it going? Value Venture Investing. Here today with your update for Air Canada. Now there's been some news that has happened since my last video, and then Friday here we had their Q1 2021 results. Take a look at the stock on Friday here, it's up over 3%. Markets were liking this news, it seemed they were liking the earnings. So today we're going to be going over the news that happened. We're going to go over the earnings. And again, as always, I'm just going to give you my personal opinion on what's going on. First, before we even get into the earnings here, if you didn't hear about it, the aid package that came from the government. Now, if you're watching my last video, the CEO was saying that he was more, positive, more optimistic than he'd ever been for that. So he was giving us some hints there, and yes, it came through, and it was a little good and it was a little bad. I'll give you my opinion on it. Of course, if you are somebody who thought perhaps Air Canada could be in some trouble financially, I never personally thought that that was going to happen because the government wouldn't allow it to happen. But I still think, looking at their cash position and stuff throughout the last year, that they've been pretty strong. I didn't think they were necessarily needed, but if you were someone who thought that that was what they needed, then this was fantastic news. There was some strings attached. It was about $5.9 billion of aid, and this came in the form of low interest loans and financing. Now, in terms of the government stake, the government was taking the government's going to rather take a $500 million stake at a 14% discount. So that's the thing that I didn't like that much. That's the thing that a lot of investors didn't like too much, because Air Canada's got like 330 million shares outstanding, and they're going to be getting about 21 million shares. That being said, it is a good thing that the government has faith in them going forward. That tells you they're not going to be planning to keep things locked down forever if they're taking a $500 million stake, even if it's just 14% where it's right now. But they were also, it depends on your thoughts on this. They were also part of the deal told that they were going to have to start doing some routes again. Like, it was kind of like a little bit, I think, of negotiation back and forth, and a little bit threatening. Like, Air Canada would cut routes to certain places that just maybe weren't profitable or weren't very feasible. Well, the government said you're going to have to put some of these routes back in place for Canadians. So that's definitely good for Canadians and anybody else, of course, traveling in Canada. So these routes had to go back in place, and refunds. Now we're going to get into the refunds as well, the impact of that on the company, but that's another thing that could be viewed as bad. Although it seems like it might be okay, a lot of people might not be exercising that option. Good for consumers, but in terms of the company itself, financials, it can be difficult. But we're going to get into that in a little bit later in the video, so make sure that you stick around. Okay, so here we're going to be looking at not just last quarter, Q4 2020, we're going to be looking at Q1 2020 as well. I'm going to put that up on the screen when we're done here as usual. Again, as always, that's on my Patreon, guys. I'm going to add that on there if you want it. In terms of passenger revenue, 395 million. That was actually down from Q4 last year. Not surprising considering the restrictions got more intense. Cargo revenue, this one was actually surprising me a little bit. It was down slightly from last quarter, but if you look year over year, is up huge, right? But they've been talking a lot about really pushing this, so I was surprised. I mean, it's pretty in line, it's pretty close, but I was surprised to not see that grow more, because that's one of their objectives right now. So that's interesting. The revenue, 53 million versus 66, so their total revenue was $729 million versus 827 million last quarter. So not quite as great, but of course, that's what guidance was kind of insinuating, that we were going into bad times, and now we're in this third wave, as they call it, or whatever. Net income was $1.3 billion loss, and that was versus a $1.1 billion loss in Q4. So again, that got worse. Cash went down a bit to 5.9 billion versus 7.5 billion. Again, to be expected because of what's going on right now. But I don't think investors are so worried about this, considering we have this aid package that that really bolsters their balance sheet and de-risks it, if you will. Cash burn, again, this was a very positive thing, and I think that investors definitely really watch this. So the cash burn coupled with the cash offset by this was probably a positive. It was only $14 million per day, but last quarter, if you watched my video, they were saying it was going to be $15 to $17 million a day. So significantly better, and it was 15. It was actually worse last quarter by $1 million, $15 million per day. We're going to go into the financials as well, but before we do that, some things that were mentioned on the conference call: 88% reduction in capacity, and that's actually a little bit worse than they anticipated. So that kind of shows you the strength in terms of their earnings, of how they've managed their costs. But then that's kind of why you've seen, I think, maybe this as passenger revenue not as strong as they thought. In terms of the refunds, they talked a lot about that, and some people asked questions about that. Pretty big number. This could be bad. Maximum $2 billion in refunds, but they expect this to be much, much less. And so that kind of shows you where the demand is. A lot of people want to get, they want to get their vaccine and stuff like that so that they can travel. And that's kind of what I was inferring that they were saying in the conference calls, that they're really surprised that more people are not accessing that. So maybe people are waiting for that credit to travel when they can. So this isn't going to be as big as an impact, but keep in mind the next quarter, or however long this is going to take to transpire into the numbers, that could be a big impact coming forward into the future here relatively soon. And of course, their guidance, about $13 to $15 million a day loss. So if you look at this quarter, it's actually less. So if they do better than that, that's not too bad. But they're saying it's not going to be better. That cash burn is not going to get better until, the government decides to start reopening the economy, which we hope, and travel is going to happen soon. Now, heading back to this stuff, if you look on the screen right now, we can look on a year-over-year basis. Just to kind of keep in mind that on a year-over-year basis, last year, this was just kind of as it was starting. So I think that's why some of their costs, some things were a little out of whack, because it was kind of in March that this kind of started hitting. Of course, their passenger revenue was $3.1 billion. Huge. Total revenue was $3.7 billion versus $729 million. And their net income was just over $1 billion and over $1.3 billion right now. And EPS was a loss of $4 versus $3.90 now. And you might be saying to yourself, like, how is that the case? How is it the case that, their EPS is even worse, and then their loss is nearly as bad in terms of net income? Well, we'll get into that when we look through their financials, just kind of some of their costs associated with operating there. Their cash at that time was over $6.1 billion, not very much different than it is right now, but their cash burn was way more, $20 million a day versus $14 million a day now. So now let's take a look at their financials, go into a little bit more depth, give you a little bit more perspective about what's going on. Taking a look at the balance sheet here first, we're not going to look at too much. Again, cash is about $5.9 billion. Keep in mind that's cash and cash equivalents and short-term investments. Not looking at too much in liabilities here. You can pause the screen if you want. But I did want to note here that long-term debt and lease liabilities stayed about the same. If you want to know more about that, watch my last video. But that was good to see there. And that their total liabilities as a whole didn't change too much. $26.5 billion versus $27.1 billion. And their total assets are over $27 billion this quarter as well. Also keep in mind, guys, that this is they kind of go back and forth on this stuff. This is on a year-over-year basis. Going into the consolidated statement of operations, this is on a year-over-year basis as well. I broke these down on the board on the operating revenues and talked about those a bit. Operating expenses here, one special note is special items. Keep in mind that the Transat deal fell through, so this loss here of $127 million, $12 million of it was for that. So we saw an operating loss of over $1 billion, but keep in mind that's not going to be something, a lot of that's not going to be carried forward. So this kind of answers a bit of the question as well. It's like, how did they almost do worse in terms of net income and stuff a year ago? Well, look at their total operating expenses, $4.1 billion versus $1.7. That really speaks to how they've really streamlined the company. Of course, things like aircraft fuel and wages and stuff are going to be way, way less, but it shows you how they become so much more efficient. And this could really turn into, potentially, really far in the future, a company with a higher valuation if they bring some of these efficiencies forward. Non-operating expenses here, we had a non-operating a total non-operating expense of $338 million versus $843 million a year ago. So you can look through that if you want. So the total net loss for the period was again $1.3 billion versus just over, almost 1.05 billion a year ago. And of course, $390 versus $4 loss on a year-over-year basis. Taking a look at their cash flow statement here, net cash flows used for operating activities, one of my favorite things to look at here. $888 million were burned in operating activities versus $20 million a year ago. Now taking a look at financing activities, proceeds from borrowings, they didn't borrow quite as much here, 128 million versus over $1 billion. So as a result, also they did issue shares here as well, but we've been talking about that as well. So as a result, this quarter, it was actually a loss of $205 million coming out of the financing activities portion of cash there, whereas it was positive $387 million a year ago. Almost complete opposite here. Net cash flows for investing activities was 731 million versus 68 million a year ago, and this is mainly due to investments in short-term and long-term, so they took some money there from their investments, obviously strategically there as well. And you look at cash and cash equivalents at the end of the period, again 3.2 billion versus 2.5 billion a year ago. So all in all, the quarter wasn't super surprising for me. I'm actually surprised that the market is so happy with it. But again, I think some of the reasons is, of course, government aid, maybe this $2 billion for refunds and it not being as much as they figured is coming into effect. And of course, the cash burn being huge as well. So overall, for given what's going on, how tight the restrictions are, I think this is a pretty good quarter. And again, I still stick with my, my assertion there, guys, just my opinion, of course, that this could be a $40, $50 stock. Of course, do your own research when we finally come out of this. So I'm still holding, I'm still watching. It's going to be really interesting the next couple quarters, depending on what happens with restrictions, to see, especially also to see, when we do come out of this, if this cargo revenue remains strong, because that could be a new addition to their business that's very viable and really drives to the bottom line and maybe even the valuation. So we'll see going forward. Would love to know what you guys think. How do you think the quarter was? What are your thoughts on this government deal specifically? Because I was kind of really mixed on it as well. I'd like to know down below what you think of that. Don't forget to like the video, guys. Subscribe. Helps the channel so much. Thanks so much for watching, and I will see you guys in the next one.